95% of traders don't lose because they can't analyze the market. They lose because they don't know how to manage their risks. If you don't fix this one thing, no strategy will ever save you. Today I will teach you risk management in the simplest way possible. The same rules professional never breaks. Risk management is not boring. Risk management is survival. You can be right in the market and still lose money, but if you manage risks properly, you can be wrong and still stay profitable. By the end of this video, you will understand what risk management really is, how much to risk per trade, why most traders blow accounts, and the rules that keeps traders in the game. Yeah, what's up traders? Without wasting much of our time, let's dive into the topic of the day, which is risk management. So if we're talking about risk management, what is risk management? Risk management means controlling how much you can lose before you enter a trade. Controlling how much you can lose before you enter a trade. Not after, but before. So risk management is a decision that every trader needs to take before entering a trade. To know the certain amount that you are willing to give to the market, be it 10% of your account, be it 1% of your account. If you are willing to give to the market all your account without facing any emotional damage, it is your decision. So risk management is all about controlling how much you can risk before you enter a trade. Because most traders, how they do is they already enter a trade, then at that point in time their emotion is messed up. That is when they will start making decisions that are not meant to be. You are not asking how much can I make, you are asking how much am I willing to lose if I am wrong. This is one question that every trader needs to ask themselves before entering a trade. Not how much am I going to make in this setup, am I going to make $10,000, am I going to make $100,000. No, what every trader needs to ask themselves before entering into a setup is how much am I willing to risk if the trade goes wrong? If I am wrong, how much am I willing to lose? That is a very important question that every trader should ask themselves. That mindset alone separates gamblers from traders. The mindset of asking how much am I willing to lose if I am wrong, it separates gamblers from traders. It shows who are gamblers and it shows who are real traders that will stay and become profitable in the long run. These are few reasons why most traders fail in the financial markets. Overloads, that is number one. Secondly, over risk. Thirdly, trades with emotion. Fourthly, chase losses. These four reasons is why most traders are still stuck in the circle of unprofitability. These four reasons. Number one is overloads. You increasing lot size above your capital. Lot size that will damage your initial capital. It makes many traders fail in the financial markets. Over risk means on a setup which you are meant to risk $20, you'll be risking over $100. That alone makes a trader fail woefully in the financial market. Trades emotionally. If your emotion is not stable, do not trade. Because if you trade with your emotions, you are just giving out your account freely to the market. Because one, the market is not after your emotion. The market don't care if you are passing through a lot. It is none of their damn business. They don't want to know if you are passing through a lot. They are not after if you are happy or you are sad. They are not after if your family member is angry or happy. They are not after if this is your last capital that you have. They are not after any of those things. So you don't need to enter the market with your emotion not stable. Chase losses. This fourth one being the chase losses, it simply means a situation whereby you had a loss. where you have to rest after hitting SL, you said no, that you have to recover. Then you hit loss, you said no, you have to recover. So you are chasing losses in a situation whereby you are hitting loss back to back, but instead of you to leave the market, you still keep coming the same day. Mind you, I'm talking about the same day. A situation whereby you are taking over 10 trades a day, you are chasing losses. It's not meant to be. Highest 2 to 3 setups a day. You're not even meant to take over 5 setups a day. It's not meant to be. You are chasing losses. So you just have to put that into consideration also. And mind you, if you put that into consideration, if you put these 4 reasons which I just outlined why traders fail into consideration, you're just 10 steps ahead of many traders. Take note of that. You are 10 trades, you are 10 ahead of many traders. So the risks, mind you, another problem why traders fail is because they risk too much on one trade. Then one bad move wipe weeks or months of profits. This is one mistake that many traders do take, because a situation whereby you made profits Monday, Tuesday, Wednesday, Thursday, then Friday you'll be like, okay, if I was the one that made profit Monday, Tuesday, Wednesday, Thursday, guys, it is possible for me to also make profit this Friday. Then this is where over risk and over lot size coming, because at that point also emotion is also there, because you're emotionally happy because you made profits Monday, Tuesday, Wednesday, Thursday. So you are emotionally happy. Then you overlot, you high lot size. Then you over risk, risking what you are not meant to risk on that setups, which will result to as you wiping away your entire weeks or your entire months of profits. So take note of that, guys. Make sure that you stick to your proper risk management. Always ensure to apply proper risk management, 1 to 2% of your account. And take note of that, while you lose your profits, the market is not your enemy, your risk is. Once you come to accept that fact, guys, your emotion is beginning to stable. If you take a loss on a trade and you start blaming the market, then you still have a long way to go. But whenever you take a loss in the market, then you put the blame on yourself. You know the reason why you had that loss. Then you are 10 steps ahead of many traders. So take note of that. The market is never your enemies. For those of you who are always shouting, what have I done to this market? Why is this market after my life? Why is this after? The market is never after your life. Your risk is. Yes, your risk is after your life. So you have to put that into consideration and take note of that. Risk wisely, guys. Risk wisely. Okay, here also I outlined the golden rules. The golden rules to follow. This is the key to profitability. Mind you, if you can follow this step, guys, this is the key to profitability. Never risk more than 1 to 2% of your account on a single trade, guys. Never do that as a mistake. Risking 1 to 2% of your account on a single trade is like planning for a death sentence. Never do that. If you can take note of this and if you can stop all these problems, guys, be rest assured that profitability is knocking to your door. If you have for example, if you have $1,000 account, your risk should be $10 to $20. $10 to $20. That is 1 to 2% of $1,000 account. That is the rules keeps you alive even during losing streaks, guys. Take note of this. Rules keeps you alive. You might be on a losing streak of, okay, let me just say, for example, you have been losing back to back for like 5 trades lost down at a rows, guys. Just one of your setups, just one, at most 2 of your setup will bring you back up into profitability. So guys, you have to take note of that. 1 to 2% of your account. Okay, so we'll be talking about risk versus lot size. Very important. Risk versus lot size. Your lot size depends on your stop loss, not your emotions. Take note of that, guys. Your lot size depends on your stop loss, not your emotion. A situation whereby you are happy, as I said earlier, guys, you are on a profitability streak of Monday, Tuesday, Wednesday, Thursday. Then the situation came on Friday. You want to increase lot size just because you have been making money, just because your emotion is happy. Guys, you have to take note of that. You don't need to put lot size based on your emotion. It should be based on your stop loss. It should be based on your stop loss. If your stop loss is your 1 to 2% of your account, then you can reach it. But if it is more than that, avoid it, because if you take that trade, you're just preparing for your death sentence. And we have to put that into consideration also, guys. Put that into consideration. Before every trade, you must know your stop loss, your risk percent, and your lot size. Okay, for example, now let me go to my chart. I want to take a buy on XAUUSD. First and foremost, after analyzing, I'm expecting price to get to this point before I will buy. Then what am I meant to do? My SL should be protected below this point of invalidation. Then what I'm meant to do is to calculate how much am I willing to risk in this market. If I'm willing to risk $10 in this market, second thing for me to calculate is what will be my risk. Second thing to calculate is what should be my lot size. What should be my lot size? What should be my lot size? Take note of that, guys. What should be my lot size? The first thing you did was to calculate your risk percent, 1 to 2%. Then secondly, you know where your stop loss should be. Then most importantly, to manage or to align with your risk percent and your stop loss, you need to know the lot size to use. Then if it is a lot size of 0.01, then you know that you put your entry in here, you protect the point of invalidation, then you target for your take profit. Easy peasy. Just as simple as ABC. So take note of that, guys. Your stop loss, your risk percent, and your lot size. Big lots plus small accounts is equals to disaster. You also need to take note of that, guys. In a situation whereby you have a $100 account and you are risking over $1,000 and you are risking over one standard lot size, guys, that is a disaster to your account. So what you are meant to do is a $100 account, you try to know what is 1 to 2% of a $100 account, then you risk that and also know the lot size to use for that. Professionals don't care about looking rich, they care about staying consistent. Many big traders in the industry, being rich, it is also part of the plan, but you have to be consistent, then that will follow. Putting consistency into consideration, riches will follow. Once you just have that knowledge, guys, then you put consistency into consideration. Forget everything about riches, because they will follow. Definitely, once you can be consistent in the game, definitely it will take time, but one thing is certain, guys, riches will follow. The Miami you want to go to, the Dubai you want to go to, all will follow. You just have to be consistent. You just have to be consistent. Risk to reward, very important. Risk to reward, guys. This is it here. Risk to reward. To know our risk to reward, to know a proper good risk to reward to apply in a single trade, guys. Mind you, risk to reward, how winner stays profitable, it is because of their risk to reward, guys. You applying proper risk to reward will keep you profitable in the long run. That is just the truth, guys. You applying proper risk to reward will keep you profitable in the long run. So you just have to put that also into consideration to apply a proper good risk to reward. A good trader doesn't need to win all trade. For example, guys, you risk one, your aim is, okay, let me just say you are targeting 1:2, 1:3. Even if you lose that one setup and you make profit in the second setup, just know that you recovered your loss and you are up profits. You are up profits. So you applying a proper good risk to reward ratio will keep you long in the industry. But if you are applying ratio 1:1, that is, for example, you applying ratio 1:1. If you are to lose, guys, if you apply ratio 1:1 and you are to lose that setup and you made profits the next setup, just be rest assured that you just recovered your loss, but you are not up profits. So why a proper good risk to reward is good is that a situation whereby you lose 3 times on a row. If you are using ratio 1:1 and you lose 3 times in a row, you are meant to be profitable 3 times in a row before you can recover your losses. Talk more of profits. But if you are using ratio 1:3 and you made one profit, you lose 3 times in a row and you made a single profit, just be rest assured that you recovered your 3 losses, and any other setup you are making profit from, it is your profit instead of you recovering losses. I don't know if you understand that, guys. Even if you just win 4 out of 10, guys, if you are applying a proper good risk to reward ratio and you made a profit just 4 times out of 10, guys, you can still be profitable. Not that you will still be profitable. So the only thing you have to do for yourself is to apply proper good risk to reward ratio. It will keep you in a long term in the industry. That's how trading actually works. Trading is not complicating. Trading is not confusing. Trading is not after your life. Trading is not wicked. Trading is not the idol from your father's village. It is just that you are not following the right pattern. Just that you are not following it the right way. Just that you are not following it in the right direction. So if you are to put all this into consideration, that is, you are ahead of many traders. Guys, this is very important. This what I'm about to outline now, guys, it's very important. Common risk management mistake. Very important. Things for you to avoid. Things for you not to do, so you won't fall in the trap of a dino. Am I understood? Things for you not to do, so you won't fall in the trap of a dino. Moving your stop loss emotionally. It kills. Okay, let me give you for example on the live chat here, guys. Okay, for example, you want to sell gold at this point. You entered for your short position. For example, okay, let me say, for example, your SL was here, your stop loss was here at the initial time, then it ran small profits, then you saw a retracement up, you start increasing your stop loss. Start increasing your stop loss. Can you see that at the end of the day, the price did not later come down? It went all the way up, and if you have been increasing your stop loss, then you lose your money. You blow your account at the end of the day. You blow your account. So never do not try that as a mistake, guys. If you want to be profitable in this industry, never you try that as a mistake. There's a reason why I'm sounding this as a warning, because nobody told me. There's a reason why I'm sounding this as a warning. So never you try this as a mistake. Increasing lot size after a loss. Okay, for example, you at your last trade, you took a trade and you were using 0.01 lot size, and it went against you. Then you said, okay, I'll have to recover my profit back. Then you increased your lot size to 0.05. you don't dare do that, because if you try that as a mistake, be rest assured that everything is possible in this industry. You just have to have that in your mind. Have that in the back of your mind, that everything is possible. Losses are possible, profit are possible. So you increasing your lot size, be rest assured that it is possible for that same setup to go against you. And the more you increase your lot size, the more your risk increase. So you just have to avoid that, guys. Revenge trading, that is very bad. One of the problems that make many people stuck, many people give up in the industry, revenge trading. And that also have to do with your emotion. Because in a situation whereby you had a loss, your emotion will be messed up. Then you start forcing unnecessary trade. Try looking for setup by all means, which will be giving you losses back to back. At the end of the day, you will see that you just in a day you blown your $100 account. How will you be profitable if you are living such a lifestyle? So you just have to put that into consideration also and avoid that. Risking more to recover fast. As I said earlier, guys, you risking large. Okay, maybe because you had a $10 loss, then you are risking high so that you can just make the $10 profit back. That is a dead sentence, guys. You have to avoid that. If you know you want to stay long and you want to be profitable in the industry, you have to avoid that, guys. Trading is not about speed, it is about control. Guys, one truth I just want to tell you guys is that, you see, trading, you cannot come into the industry under 3 months. You are planning on buying your Rolls Royce. It is not possible, guys. It is not about speed. You don't have to fasten the process. You just need to take it slow and steady, guys. Slow and steady. At the end of the day, you will get there. Once in a setting, you will get there. You just have to take it slow and steady, guys. Take note of this, guys. This is very important. Take note of this. Once you accept your risk, be rest assured that you stop panicking. You stop forcing unnecessary trades. You trade with peace of mind. You have to trade with peace of mind, guys. You trade with peace of mind. Losses stop haunting emotionally because they were planned. You planned to risk 1% of your account. So even if the trade goes against you, you will not be emotionally down because you planned it. It was all planned, guys. And when your mind is calm, your decision improve. Guys, whenever you are calm, whenever your mind is calm, your decision improve, your ideas improve. So guys, you just have to be calm while the decision comes, guys. You don't need to be under pressure making decision. No, you will make a wrong decision. So you just need to be calm while making decision. Take note of this also, guys. Find the final truth about trading, final truth about risk management, guys. Risk management won't make you rich overnight. Once you come to understand that, guys, that risk management won't make you rich overnight. Once you come to understand that, then you are ahead of many traders. But without it, you will never be rich at all. Guys, you have to jot this down and paste it in front of your house, or let me just say, paste it at your door or your bedside. So whenever you wake up, your eye will go straight to the right up. It should be your reminder. It should be your reminder. Risk management won't make you money overnight. But at the same time, risk management, without risk management, you will never be rich. You will never reach there at all. You will never be rich at all. You will never go to the Dubai you want to go to. You will never retire your parents. You will never succeed in that your plan if you cannot apply a proper risk management. Mind you, this is not only applicable to trading. In your life, your personal life, if you do not apply proper risk management, you will never be rich at all. So guys, you have to apply proper risk management. The goal is not one big win. The goal is staying in the market long enough to win consistently. That is the goal, guys. The goal is not just for you to come to the industry, then you hit $1,000 once. No, The goal is for you to consistently make $1,000. That is the goal. Not just a single $1,000 and that is all. Can you consistently make $1,000? That is the goal, guys. So guys, that will be the end. So guys, if this helped you, please do ensure to like these videos, comment in the comment section, guys. Risk first. I want to see that in the comment section, guys. Risk first. If you are serious about trading, guys, subscribe. If you want real trading education, no hype, just the truth, guys. Here we give you truths about trading, facts about trading. Here is not about lifestyle. We don't talk about lifestyle. We teach you how to become the multi-millionaire you want to be. Teach you how to become the multi-billionaire you want to be. We teach you, we create a man in you, a human in you, to make you know that okay, you don't trade your time for anything. We make sure that it is possible for you to get that financial freedom you are looking for. Guys, if you don't subscribe to the channel, you won't be notified whenever new content is dropped. So you just have to subscribe so you can be notified whenever I drop new content. Thank you guys, and stay safe. Peace and love.